The Rebel Capitalist Show.
Right off the bat, let's go ahead and probably talk about the dollar. That's what you're most well known for. It's been down a little bit. I did a video last night where
I saw it. I watched it.
Yeah, the main point there was, and I think some people took it the wrong way, is that the dollar's only down 10% in the last 5 years. So I don't know that I'd call it a crash. But what people should really be focusing on is how much the dollar is down against everything else, like gold, real estate, stocks, Bitcoin. And you know what my first question was, kind of curveball for you. I was thinking, okay, if the dollar, well, let me put it to you this way. If we have a global commodity that's used by 80% of, let's say, corporations and global business, and it's down 40% against gold, 99% against Bitcoin, 50% against stocks, I mean, is there an argument that it's cheap? Because, we like to buy things when they're cheap and sell them when they're expensive. And I don't know. What do you think about that?
Well, I think what my answer will be on this is that I think that there is a fundamental case for the argue that the dollar is undervalued. And I know that I'm in the minority. All you have to do is look at the chart to know that I'm in the minority on this. The dollar is not a pretty chart right now. I was looking pretty smart back in March, and I'm not looking so smart today. But I still believe that this is all set for a major reversal. Now I have,
Okay.
My argument has never been one of perfect timing. The idea that I can call this perfectly and time it perfectly, I would never make that claim. But what I know is that the table is set for a crisis. And I also know that whenever there's a crisis, until they completely change the system, whenever there's a crisis, the dollar rises. And I think you could make an argument that the dollar could rise precipitously. And if that happens, it doesn't take the dollar to have to rise that much for really bad things to happen. The dollar was up 3 or 4% from January 1st to March 20th. And it caused global havoc, right?
Yeah.
Bad things happen when the dollar rises. And I would argue that the central banks and the monetary authorities aren't at quite as in much control as the market seems to think that they are. I threw a couple of slides your way. The very first slide, and you can share these with your listeners, is it basically just shows, listen, you can take this back further, but I basically just took it back to 1995, call it.
Mm-hmm.
And because that's about 25 years. Every time the global economy has either slowed or there's a crisis, the dollar rises. And it makes sense because whether you like it or not, whether you think it's appropriate or not, whether you love the dollar or hate the dollar, it doesn't really matter. The global monetary system is on a US dollar standard. 100 years ago, we were on a gold standard, and now we're on a dollar standard. Now that may change someday, but as of right now, we're on a dollar standard. And it makes sense when there's a global credit contraction or some kind of a crisis, people have to scramble for the underlying collateral of the system. And that underlying collateral is the dollar. So again, I am of the opinion that the monetary authorities and the central banks aren't in as much control as everyone seems to think they are. I'm of the opinion that this global reflation trade is not as certain as the market thinks it is. And I'm absolutely sure that at some point in the future, we're going to have another crisis or another global slowdown. Now, whether that's next month or next year or 2 years, I don't know. All I know is that the table is set for a big crisis. And I believe when it happens, the dollar will go up a lot higher. I don't think it will be different next time. To say that the dollar is going to go down in the next crisis would be to throw out the last 25 years of history. Now, is it possible I'm wrong? Of course it's possible. It's possible it will be different next time. I don't think it will be.
So, couple questions. Number one, I understand how much pressure this adds to global corporations and countries who just went on a binge of dollar-denominated borrowing back in, let's call it 2011, 2012. When the dollar gets up to 100 or 110 on the DXY, how much pressure is actually relieved, if any, when the dollar is down at maybe 90, let's say, at these levels? Is there any pressure that's released?
Well, there's definitely pressure relieved, but there's not pressure extinguished unless those entities who owe those dollars take the opportunity of dollar weakness to pay off the dollar loans and then not reissue them. But that's not happening.
Because
They're
of the
not
cash
paying off.
flow problem.
Right. They're not paying off the dollar loans. They're actually taking out more loans. And there's several global entities that are actually issuing. This is the thing, because everybody needs dollars. If you borrow in dollars, you get a better rate. And if you believe the dollar is going to fall, you can borrow in dollars and pay it off at a lower price. And that's what they've done for the last 12 years, right? And that's why when the dollar rose, it became a problem. So now that it's falling again, rather than taking that opportunity of it falling to get out from underneath this pressure of the dollar, they're doubling down. They're issuing more dollar bonds. Somewhere in here, I have a slide. I think
that was one of my questions for you, Brent, because last night I did a video and kind of the conclusion is just for a very simple way of determining if the dollar is losing its global reserve currency status is just to look at how much dollar-denominated debt exists in the world as a percentage of total global debt. And if that's continuing to rise, then the dollar isn't losing its reserve status. If it's going down significantly and very quickly, well, maybe it is. That's kind of a tell. But my chart only went to 2018, and so I think around at that time, according to the chart I had, the global debt denominated in dollars was about 12 trillion. Where is it now? I assume it's higher, but I wanted to ask you.
Well, it's very hard to say because it's very hard to measure. And the reason it's very hard to measure is because, and this is where it all gets very intertwined and opaque and hard to measure, because we have the US dollar market and we have the offshore Eurodollar market. There's two dollar markets. There's a domestic dollar market and there's the international dollar market. Because the Fed does not have jurisdiction over the Eurodollar market, they can't force firms to report their holdings or their exposures, So there's no real way to measure all the different dollar credit that has been extended in the Eurodollar system. There's been estimates, and I think the number you're quoting is the bank debt or whatever issued outside the U.S. in dollars by the Bureau of International Settlements or Bank of International Settlements. But then there's other estimates that have it twice that high, and there's other estimates that have it 3 times that high once you start factoring in the shadow banks and the non-financial institutions and that have extended credit of some kind. The bottom line is the Eurodollar market is bigger than the U.S. market. And so there's a lot of demand for dollars out there just to service the debt. Now, to your point, I will say, I understand the point that you were making in your thing last night. I actually disagree with it, but it doesn't mean I'm right.
No, Brent, you're a pro, buddy. I'm just an amateur trying to figure it out. So where do you disagree?
Well, I think it's this big catch-22, right? And my point is that until there's a suitable replacement to the U.S. dollar and the U.S. dollar payment system, you're in this catch-22, whereas if you don't continue to issue dollar debt and you don't continue to extend credit, then less dollars flow. So in other words, if you start to pay down that dollar debt, it's actually deflationary. There's less dollars in the system. But let's say if you stop issuing new debt in dollars, the first step is not to start paying them off. The first step is just to stop growing, right? Well, the problem is when you have a debt-based monetary system, the system has to grow or it crashes. It's just math. And so it's very hard to stop extending US dollar credit without it leading to a US dollar credit contraction. But let's say that you can. Let's say that we just stop growing and then we start paying. Once we stop growing, then less dollars are circulating. And if we actually start to contract a little bit, and you start to pay off some of that debt, it's actually deflationary, which means there's less dollars in the system to then service the rest of the debt that does exist.
Right. So demand for dollars goes up.
So demand for dollars goes up in the short term, right? And so and that's why I think this idea that de-dollarization is dollar negative in the long term, yes, it is, but in the short term, it has this contrary effect of actually causing less dollar supply, and therefore in the short term the dollar can rise. And that's kind of the point that I try to make. Listen, the dollar is going to go down significantly at some point. We are going to leave the dollar is the global reserve currency at some point. But it just doesn't happen the way many people think it happens. And I think the tell that it's coming is not the dollar falling. If the dollar falls, everything works. The system currently works. The dollar falling is the central banks winning, right? So if you think if you're bearish on central banks, you should be long the dollar because that's the last thing they want. And my point is like the signal that the dollar is losing reserve currency status is not at falling, it's spiking. Because if it spikes, they're going to have to reset the whole system.
Right. So, but those things could happen simultaneously, I guess. We could see dollar-denominated debt go down, the dollar spiking, and then that kind of being a tell in and of itself.
If and when that happens, I will be selling my dollars and I'll be buying everything else.